Hi, I'm Andrew Wright, Principal of Professional Southport, and this is the Andrew Wright Property Podcast. I've built a multi-million dollar property portfolio, delivering a seven-figure annual rental income, and led my real estate team through thousands of sale and lease transactions. In each episode, I share real deals and strategies that will help you find, fund, and operate profitable property deals. The aim of this show is to provide education and build a community of like-minded investors who can collaborate, share insights, and help each other in each other's journeys. You can make excuses or you can make money, but you can't do both. So come and join us.
Welcome back to another episode of the Andrew Wright Property Podcast. Today we're talking about an asset class that no one takes seriously, but maybe they should: car parks. Now, this isn't just about parking. This is about cash flow, land banking, and future development upside. Andrew, I've got a feeling this episode might change the way people think about property investing, because I don't think anyone ever considers car parks as one of their strategies.
No, probably not, Adam. It's a bit like that one we did on the truck parking depot, and you mentioned when you went to New Zealand, you started seeing truck parks everywhere after we did that podcast, and probably the same result from this car parking podcast.
Well, look, I do this podcast with you now. You've got my mind thinking, as I hope we have for a lot of listeners, and I do think about things that I've never have before. And one thing that's always crossed my mind is you pass that, you're usually thinking in a city, the bigger cities, and you pass that little, what is essentially an empty block with some temporary fencing around it, and the parking available here, and it's just literally an empty block. And I'm thinking, well, surely this you'd be looking to develop this and build but there's obviously a strategy around that, and that's what got me thinking about car parks as a whole. But look, let's talk me through it. What do you actually mean by investing in a car park? What could that look like?
Well, that one scenario you just talked about probably relates mainly to the major CBD inner parcels of land, where a developer might be paying a whole heap of land tax, because typically large blocks of land in the middle of the CBDs have a large land valuation. They're paying land tax and rates, and to try and manage the outgoings, they temporarily for several years might use the site for car parking, and sometimes they'll manage it themselves. Sometimes they'll do a revenue sharing car parking with some other company that specialises in managing car parks.
Sure. Okay. And let's talk strata, versus freehold. You've had an example at your own office where you've had some strata car parks that you've generated some cash flow through.
Yeah, I've got 12 car parks in my building in Southport there, and for a while there in the last 12 months, I didn't need three of them, and I leased them out for $165 a month each, which is $5,000 a month extra. I've got some tenants in now that just moved in next door, and they're using those three car parks. But car parking is in such high demand, as you know, everywhere you go, and it's just the whole background as to why this asset class is a good opportunity.
Absolutely.
And will probably continue to be more so, because if you think about, there's not much spare land around, and every time someone builds a private building on one of those vacant blocks of land, there's no more public car parking available there.
No.
So the demand's only going to increase.
Absolutely. And we're only getting more cars as well. I mean, it's never going to go down.
Yeah, that's right.
But freehold's more what you're interested in. I mean, strata's pretty easy. If you've got car parks, you're not using them, rent them out.
Yes.
But freehold, there's a lot more opportunity, isn't there?
Yep.
And I guess you can talk in a city, you can talk rural, and I want to go through all of that with you. But there's even been scenarios, hasn't there, and this is with big parcels of land where, the investment has been where they've sold them off, basically subdividing land into car spaces and selling them.
Yeah, they're particularly, there's been a couple of examples. One sort of park and fly near the Sydney airport there, or I think they broke down one large commercial lot into about 800 car parks and sold them off for $50,000 each. And that's all great, but you know, my main motivation for talking about this is where you own a chunk of land that's going to go up over time, rather than not just 25 square metre block of land,
Yep.
but a bigger chunk of land, and that's where I think the freehold opportunity is.
Okay. Talk me through this asset class, because it's a very simple one, isn't it? And that's a real attractive feature of it.
Yeah, well, once again, like if you have a think about the busiest car parking facilities, they're generally in the middle of a CBD somewhere, close to employment hubs, close to attractions, sporting events, tourist areas, and that's where you want to buy a chunk of land that's going to go up in value. If you can get a tenant in there, either overnight parking, short term, or a long term tenant to pay your rent on that block of land, it's only going to go up in time.
Yep.
You've got no buildings depreciating. You've got no building insurance. You've got no plumbing and air conditioning problems. It's basically just a fence and a bit of hard stand.
Yep.
And you've got cash flow coming in, and over time that land's only going to go up in value. And when the time's right, you can add value to the site and get a capital uplift by getting a development application, sell the property off, or develop it yourself to add value.
Looking to get it to its highest and best use.
Yep.
Absolutely. So this asset class is on your radar.
Yeah.
This is something you're looking for. So what's your checklist? What if you're going to find, a car parking opportunity that I would assume part of your checklist is going to turn into something else later.
Yep.
What are you looking for?
Well, Brisbane City, Sydney, Melbourne, the Gold Coast, the prices are so high for land in the CBD areas that the rental yield of a car park is just not going to stack up. It's probably going to be just enough to cover your rates and your land tax, but it's not going to be a great yield. So in my opinion at the moment, if you want to look at those CBD areas, you probably need to have a look at a syndication with some other people or some developers that want to build a high-rise and build it pretty quickly. But if you can find a site in a smaller regional city where the land value is a little bit cheaper, it makes it a really, really good opportunity. So we'll talk about one that I bought in Ipswich a few years ago, and that might make a bit more sense as to how the numbers work.
Pull it out in an example, sure. Because as we start to, pull this apart and people are listening, I think most people will think it's just parking income. What are they missing?
Well, it depends on the site, but the main part of this is we'll just go through that Ipswich example if you don't mind.
Sure, let's do it.
Numbers.
Let's do it. Yep.
I bought that little car park there. It's 936 square metres, so just a very, very small one, but it is right in the middle of the CBD.
Yep.
It, along with the property next door, which I also purchased, had a development approved for a 15-storey high-rise building with 160 units in it. So,
but it was a car park being used
site,
as one when you bought it.
That's right. So it already had a tenant in there. It's the Ipswich City Council. They've been there since the year 2000. So they've now been there 26 years paying rent.
Pretty rock solid.
My last invoice to them was $43,000 for the yearly rent on $475,000 purchase price. So whatever that is, I think it's might be 8%. Rental return, and that site long term, if they decide to ever move out of there, I'll be looking to get an uplift to develop it either as a high rise building and flick it, or maybe a smaller development that I can actually fund myself. It might just be 7 townhouses and something I can build myself and keep.
Okay, so. You've spoken the basic numbers there. You're looking at about an 8% rental. How much? 475,000.
475. I purchased it for the last invoice I sent them. It's 43,000 including GST. So it might be 39 grand.
For what period was that?
For 1 year. They pay yearly in advance,
right?
And they pay all the outgoings.
Yep.
So it's about might be 8% return. 7% net.
These are amazing numbers that you're actually talking about here. Did it have development approval when you bought it? Because I'm guessing not, because that is a cracking deal. And why would someone be selling if it was?
Yeah, so that one there was a mortgagee in possession sale with 3 other buildings next door to it. So it wasn't being sold just as a car park. That was basically an add-on to the other 3 sites. mortgagee in possession. They probably didn't want to sell, but they were forced to sell at that time through financial difficulty. So I wasn't specifically targeting a car park, but when I had a look at the fact that the cash flow was there for that car park, it previously had a development approved for 15-storey high-rise, which had lapsed. I thought, well, down the track, it's going to be a lot easier for me to go down that track again and reignite one of those development approvals to add value to the site again.
So you have done that now?
No, I haven't.
You haven't?
I'm exploring that now.
Right.
I haven't got the money to build a 15-storey high-rise,
Yep.
and I'm in no hurry to do so with all these building costs going up. But just last night preparing for this podcast, I was thinking, well, I wonder whether I should try and restart that process, and if not, maybe go for a smaller development like 7 townhouses or something that I could actually build and keep for myself.
Sure. What would be your decision-making process on when and why to move from a tenant that's paying yearly in advance, you're getting 8%, to make that decision? No, it's time. What goes through your head in making that decision?
Yeah, there's multiple of factors. I guess the first thing that would trigger that would be if the tenant gave me notice that they were leaving. So under a commercial lease, usually they have to give you 3 or 6 months notice that they're leaving. So if they were to do that, that would automatically trigger me to say, okay, well, do I want to try and find another car parking tenant now, or is now the time to go and spend 12 months getting an approval in place to actually build a dwelling on the site? So that'd be the main trigger. Yep. If the cash flow was really, really low, like in a lot of these CBD big towns, you might be prompted to get an uplift a lot sooner because you'd actually be having negative cash flow by the time you pay your land tax and everything. But that particular site in Ipswich, it's only $475,000. There's very little land tax on that one. So it's got good cash flow. I'm in no rush.
Yep.
But at some stage, I'll guarantee you, I will be getting a new development approved there, whether I flick it to someone else for a massive profit or build a smaller one myself. We'll just have to do those numbers.
Sure. Well, look, I'm sure we'll still be doing this podcast, and I'm really looking forward to when and if and when that happens, because it's going to be an interesting one to follow. But I want to come back to this deal. So that there are 3 other dwellings.
Yes.
So what were they? And I just want to know, because that's what you were originally interested in, I'm assuming.
Yes. So we did a podcast on this at 13 to 17 Ellenborough Street. It might have been the 3rd or 4th podcast. So,
For those who missed that, just give me a... Yep.
Sure. So 13 Ellenborough Street is a small single-level retail building. It's got 3 separate tenancies in there, and that is the building that I would also probably knock down because it had a previous development application for a 5-storey commercial building. So that number 13 would be the site for a brand new 5-storey commercial building. Now, that area is zoned for up to 20 levels.
Yep.
But when the town planning departments of the council looks at it, it's got to fit in with the aesthetics of the neighbouring buildings. And I think the 15-storey building that was approved at West Street is actually behind those buildings, and that's why it was approved. But the one on Ellenborough Street, it's probably going to be limited to 5 stories because next door to that we have number 15 and number 17, which are listed as places of significance with the character.
Right.
They're not heritage listed, but they're
something similar.
They're not at the state-based heritage level, but with the local council, they're listed as places of significance that you can't actually knock down.
They don't want them gone.
No, so those 2 buildings that have to be left there. Number 15 is a double-storey building with an office upstairs and 2 retail shops below. And number 17 is a couple of retail shops at the front, which is used as a cafe. And I've built a large gym out the back of that one as well.
Yep. A great episode to actually go back and have a listen to.
Absolutely.
About that whole deal itself. But obviously that was the deal that sparked your interest in car parks, and when you suddenly saw the bonus, if you like.
Yeah.
Oh wow! And then looked at the lease and everything else, and
it's only after, like, I was never looking for a car park, but now that I've actually owned it for 3 years, and I'm thinking, how good is this? There's no tenants complaining. The money comes in yearly in advance. There's no maintenance.
It's so simple.
I haven't spent 1 cent on that. It's just a block of land. Like there's nothing there except for a fence. So the tenant's responsible for 100% of the outgoings.
Yep.
They've fixed a few potholes from time to time, and
But the land value would just continue to grow
absolutely.
and grow and grow.
Absolutely.
It's such a good one. Look, now that's that deal. But I've got a question here. Most people, and in that one, it is literally just you're getting paid for parking. But there are other income streams you can get from car parks, isn't there? And things that people may not have thought of.
Yeah. So the institutional investors in car parking try and develop a multiple of income. So some of it is category one would be the hourly and daily parking. So if you go into one of those Wilson's car parks in Brisbane or wherever they are, you'll pay an hourly rate or a daily rate. Model two is to have a month by month lease. So they might charge $500 a month or something, which is probably less than they'd get if they rent it out by the hour, but it provides a more consistent cash flow with no vacancy. And those big operators, they'll generally have a multi-storey concrete car park. They're starting around the world now to introduce electronic vehicle charging hubs, EV hubs. So with all your Teslas and all the other electronic vehicles, there's business models out there where the company that provides those charges actually pays the rent. It's not the people using them that are paying the rent to the owners of the property. It's those people running the business of electronic vehicle charging hubs. They'll actually pay to put their equipment
They'll
there.
rent the spot on your spot.
Yes.
Right.
And then you can go further on the roof of some of these dwellings. Solar panel companies will often pay to use the roof rights, if you like, on top of the roof to have solar panels. And in some cases, you'll even see those big telecom towers that are just built on top of a car park. And you get a lot of resistance from councils if they're built on near a residential property because people are worried about the health risks of being right next to one of them. But if it's in a car park, it doesn't really matter if it's on top of a car.
That brings up an interesting one for me. And I love how you think laterally, Andrew, when you are talking about, these different types of asset classes and how you can, bring in different income streams. But it reminds me, my local shopping centre obviously has its own outdoor car park and they put up it's not even a proper roof over it. It's literally just frames with solar panels on them to charge the shopping centre. So literally just.
So I'm thinking of doing that in my car park in Ipswich. If the tenant moves out, I think they call it solar canopy. So it's just like a carport. And on top of the carport, you've got all the solar panels.
That's it. It's literally just framework to hold the panels.
Absolutely.
So another term I've heard is car stackers. What's that all about?
Yeah, well, look, I think about 30 years ago, car stackers started propping up all over Japan because of the shortages of spaces in the CBDs. And basically what they do is allow for cars to be parked on top of each other. And from a commercial point of view, a two-car stacker is probably the way to go. If you've just got a vacant block of dirt, you can double the capacity of your car park.
Explain that to me.
Well, it's just a bit of equipment that's like a hoist, and it'll actually you just park it in. If you have a look down at Runaway Bay there, they use it for the boats as well. You just sort of whack it in, and then the hoist sort of lifts it up, and they can turn it around like this. And
so is this more for long-term parking rather than short-term then?
Yeah, it is. So it takes a little bit longer to park the car when you've got to use a hoist to sort of move it around. So it's probably more suited to residential or office tenants that are going to park it there and leave it all day. Probably not so much people jumping into a retail store for 10 minutes and then getting in and out.
This is a really interesting one to me. I don't think I've seen it. I don't think I've heard of it. Is it common in Australia?
No, it's not common. I had some properties in Southport, a block of units that we were marketing a while back that had some, and our guest on the podcast, Paul Unan, a couple of weeks ago, was forced to use them in one of his developments when the council said he only needed one car park for each of the two bedders, and then they turned around and said, you need two, and there just wasn't enough room there. So instead of cutting down the number of units, they just sort of dug the basement a little bit deeper so they could fit in enough space for these car stackers. So you could actually meet the two car park requirement on the same little bit of land.
On a residential piece.
In a residential apartment building downstairs in the basement. So if he didn't have that car parking idea, he would have had to cut down the number of units he built because the council forced him to have 2 car parks for each of the 2 bedders.
Look, we're going to go online and we're going to find some pictures of these things and we're going to put them online here for our viewers. So, because I've got no idea what these things look like. Yeah. So I'm sure a lot of other people listening aren't. So we'll put it up there. If you're listening, it'll be on the screen now. Have a look, because I can't even imagine what these things look. Do you know what they cost?
Yeah, I've seen them. It's just like a little tiny rectangle, sort of a steel frame, and
right. Up they go.
Exactly like that. So what was that sound, Adam?
I imagine it like a
roller coaster or something. Yeah, probably.
I'm thinking of it like up a roller coaster, to get it up the top. But no, that's a really, really interesting one. So, but look, in terms of car parks as a whole, any risks, anything investors should watch out for or think about?
Yeah, look, the main one is to make sure that it's actually you're legally able to use it as a car park. As I said, I mean, you're not going to be able to legally do that if it's residentially zoned land. So you've got to make sure that it's zoned for that. There is not a lot of opportunity to buy these things. Like, I've been looking online for 3 years and there's not a lot that comes up online. So when you see one, you better jump pretty quickly, because there's not a lot, and there's probably going to be less and less in the future, and particularly in central CBD areas as sites keep getting built on, and there's just less and less available, which long term makes it even more exciting because the rents can only go up.
Yep.
A lot of councils around Australia too are becoming a little bit more relaxed on the car parking requirements for new private buildings. If you're building a development closer to a train or a tram, in many councils, they're saying you don't need as much car parking, but that's just going to increase the requirement for public car parks.
That's right, and the price you can charge for rent, etc.
Absolutely.
Now, a really exciting asset class to be a part of. How, in terms of overall strategy, you're in a lot of different asset classes and so forth. How does this fit into a bigger portfolio?
As I said, like, if you wanted to be all just into the car parking business, it's going to be pretty hard to acquire enough to sort of scale up a big portfolio, because they just don't come up.
No.
I've been looking. I saw one that came up in North Queensland recently, but it had massive easements underneath it. It might have been some sort of massive drains, and the engineering around building on that down the track, you could use it as a car park, but trying to get approval to build on it made it too big a risk to me, and I walked away. And it's not going to be easy for people to buy a lot of sites, but if you've got this seed planted in the back of your mind that, hey, a block of land in the CBD that can cash flow and you can build a high rise on it down the track, you'll know when the opportunity comes up to jump on it.
Sure. I want to ask you, before we wrap up, you've had a lot of experience with approval applications and knowing what is likely to get through. What's your advice for someone who finds something like this but would have no idea? And approvals take a long time. There's a lot of to and fro. There's a lot of red tape. But you've got to jump on the deal quickly.
Yeah.
You don't. What's your advice to someone who really thinks, okay, this is great. It ticks all the boxes as a car park.
Yep.
But ultimately, where my big win is going to be is getting that approval. How do they know? How can you know? What can you look for?
Sure. Well, step one in the process, and exactly what I still do today, is Google a town planner in that area and give them a ring. Now, most town planners are hungry to get appointed for a 9-month task to sort of get a development approval through. That's their business. And most of them will gladly spend 10 or 15 minutes of time on the phone telling you what the potential of that site is. So don't waste their time on 20 different sites. But if you've done a little bit of initial homework on a site and you think that, well, I could get some great cash flow on this one as a car park, and down the track it could be a high rise, do your initial due diligence yourself, and when you get to a point where you don't think you have the skill set to analyse it anymore, ring a town planner, and a town planner will set you on the right path. And if it looks good at that stage, get the property under contract with a due diligence clause, and that'll give you a bit more time to talk to an architect, a town planner, and or the council, and engineers if necessary, to see what the potential of the site is.
Would you have... I know this one's a little bit more complicated because of the other dwellings, but if we can forget those for a minute, and let's just say you'd found this car park and you thought you couldn't get an approval through for further development, would you have still done the deal as a car park?
I wouldn't, because it was a month-by-month lease. Even though the Ipswich City Council had been there since the year 2000, I did a lease doc loan on that one, and I got it. Actually, I did a full doc loan, and I was able to get a loan with the whole 4 buildings together. But usually I buy commercial properties on a lease doc loan, and the banks won't look at something with a month-by-month lease.
Sure.
If it had a 3 or 4 year lease on it and the yield was right, absolutely I would have bought it.
Yep. Fantastic. Excellent answer. Look, this has been an absolutely fascinating episode, a really eye-opening one, I think, and one I think a lot of people will completely rethink car parks after hearing this. Very simple assets, but with serious upside when you understand how to use them. So, but pretty scarce by the sound of things as well. So,
absolutely.
And if you have listened to a few of our earlier episodes, probably truck parking is an easier thing to look for. So if you haven't heard those, go and have a listen to those, because there's a couple we've done on them, and they're very attractive. But look, if you got value from today's episode, please do follow the show, do share it. Let people know out there that this show exists, and please do visit the website, andrewwrightproperty.com.au. Sign up there with your email, get updates. This is about creating a community of like-minded investors who help each other, where we can talk. Andrew's always open to talking to any of his listeners. Do reach out with an email. And look, we look forward to chatting to you on the next episode. Andrew, once again, thanks very much.
Thanks, Adam. Thanks for listening to the Andrew Wright Property Podcast. This is all about building a community of like-minded investors who can share real-life stories, experiences, and collaborate with a view to helping each other. Join us. Get in touch through the link in the show notes. I look forward to you joining me on the next episode.